Okay, I think, Anand, interesting conversation. But stay with us. We'll continue some of this post-market analysis because it is post-market. The bell's gone off. Markets have shut. Nifty down a 0.25%. The Nifty Bank ending absolutely flat. Mid-cap index, nothing. But the small-cap index is the only index which ends with about a 0.5% odd gain. So that is the overall state of affairs as far as today's session goes. Guys.
Well, the FMCG index managed some gains, so about 3/4 of a percentage point higher for FMCG. HUL, Asian Paints, ITC on the buyers list. NBFCs like Shriram Finance, Bajaj Finance with the top two gainers. The only stocks with gains of about 1.5% and plus. And a couple of PSUs like Coal India, Power Grid also higher in trade. On the way down, IT weak, HCL Tech top loser, metals corrected, Hindalco, Tata Steel under pressure, DLF, Apollo Hospitals too, down nearly 1.5%.
Okay, let's talk about some of the movers and shakers from the broader markets. In terms of today's newsmakers, Union Bank ends down about 3.5% because of a weak Q1 update. Of course, we've discussed stocks like Vedanta and Hindustan Zinc. Vedanta final count is down a little over 3%. Let's pull up Hindustan Zinc as well. It'll come up on your screens in just a bit. The ones that actually stood out on the green side today would be some of the EMS names like Sirma, even Amber and Kaynes for that matter, 2 to 5% up on these stocks because of the JP Morgan note, which sounded pretty bullish on it. And then you had a delivery. Again, it was a Motilal Oswal note, which led to a 3% pop on delivery. But overall, a very even Steven kind of a day for mid-caps with the advanced decline ratio absolutely neck to neck. So another flat day comes to an end with the Nifty around 25,476. Well, with that, it's a wrap on this edition of Closing Bell. Many thanks for watching. We have to take your leave here, but do stay tuned. Market Forward coming up next.
Powered by LIC, हर पल आपके साथ. Co-powered by SBI, best है सबको पता है.
Delivery boy has picked your order.
We know you are hungry. The message notification said it would take 30 minutes.
We can't just rely on a message.
Didn't you sell some shares yesterday?
Yes. So
did you check them?
I got a message.
You can't just rely on one message. If you make any transactions in the stock market, cross-check the SMS or email you receive from the stock exchange with your Demat account as well as bank statement.
Beta, when one's hungry, the brain doesn't function properly.
सोच कर, समझ कर, इन्वेस्ट कर.
पैसा लगाना है तो सेंचुरी प्लाइ क्लब प्राइम पे लगाओ. डूबेगा नहीं, जलेगा भी नहीं, कोई खा नहीं जाएगा, धोखा नहीं देगा, ऊपर नीचे भी नहीं होगा, सेफ रहेगा, सिक्योर्ड मिनिमम 30 साल का रिटर्न देगा. अब इससे बेटर इन्वेस्टमेंट है तो बताओ. सेंचुरी प्लाइ क्लब प्राइम, रहो बेफिक्र.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में. फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग. जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है. बुलाओ.
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो.
प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है. निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें.
Hey, finally we're meeting after all these years.
Right on schedule.
So what beast are you driving these days?
High-tech SUV. You?
Something quiet and intelligent. Ah, I love that surge of adrenaline. And you?
And I love how nothing can stop me. Still copying me, huh?
What can I say? Even your Grand Vitara has good taste. Two technologies.
Endless possibilities.
Grand Vitara strong hybrid. All grip select driven by tech.
Co-powered by SBI. Best है सबको पता है. In association with
DS Group. Create what is worth creating.
The large street fails to hold recovery, ends with minor cuts. A sharp fall in Reliance drags the Nifty below 25,500, closer to 25,476. Broader markets fall in line with the blue chips.
Heads of brokerages tell CNBC-TV18 that structural steps by SEBI to protect retail investors from sophisticated traders in F&O may be in the offing. The product's suitability for retail may also get a look they add and will, while owning up to their responsibility in guiding customers.
All eyes on trade tariffs. Experts warn US President Donald Trump's tariff threat on copper and pharma could be a big dampener amidst the India-US trade talks. However, experts remain positive about the deal. Shares of copper mining companies skid while pharma stocks did hold ground. Good evening. You're watching us here on Markets Forward. I'm Mangalam Malu. With me, Vinny Motiwala. This is your go-to show where we aim to get you all the key data points to get up for trade next day. We come to you live from the CNBC-TV18 Motilal Oswal studio. The important part, the market continues to be in that range. Yes,
I think yesterday where we started off the show, and today it's the similar same.
Today is the same thing. You know, the only difference between yesterday and today, yesterday last hour there was a big spike and we gained all of 60 points. Today there was a big downtick and we lost all of 45 points. All in all, between the high and the low of the Nifty, the range has been around 125 points. And that's exactly how the market has been over the last 1 month or so, where the average range on the Nifty has been about 180, 190 points. And if you were wondering whether the bulls won today or the bears, just look at the advanced decline ratio. You'll realize that at the end of the day, both of them shook each other's hands and said, you take one, I take one. There were 1,350 stocks advancing, 1,350 stocks which were declining. For most part of today's trading session, we had the advances line above it, but now, towards the end, both of them shook hands and said, one for the bulls, one for the bears. Hi, Vinny.
Absolutely. Hi, Mangalam. So, yes, interesting day coming in. Not much of an interesting day, but from where we were yesterday, just that range-bound trading session. Only thing I want to highlight is the Nifty small cap today. That's the one which managed to close on to in the green with gains of almost 0.5% in today's trading session. And yesterday, what we were talking about in terms of Nifty Realty being the top gainer, today it's among the top sectoral losers. We had Nifty Metal that was among the top sectoral losers as well. And tomorrow we'll be watching out for TCS's numbers. So keep an eye out on the IT pack. Today Nifty IT was down almost 0.8%. But yes, that's how the market setup was looking like. But we have an exciting lineup for you all on this on the show today. And first off, we'll start with the top movers and shakers for the day with Urmas Patakia. Then we move on to Vedanta issuing a clarification on a report published by a US-based short seller, Viceroy Research. And then reactions will come in on EMS stocks that were in focus today after brokerage commentary came in on the sector. Also, we'll turn the spotlight on IEX. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. So let's start with the first segment for the day. And we have Urmas joining in with us from the big wall to take us through the top movers and shakers for the day. Urmas, over to you.
Almost getting used to having dull days on the street, as was the case today as well. But the pharma sector stood tall today, despite that 200% tariff threat from Donald Trump. Mankind Pharma doing well for itself. In fact, Laurus Labs ended at a 52-week high today, almost 75% higher now in the last 12 months. Torrent Pharma too, seeing some bit of gains. And it was Metropolis Healthcare that was not technically pharma, but yes, 8.5% higher on that stock as well. The newsmakers today, of course, the second half dominated by Vedanta, and the clarification issued by the company at one point was down 7%. So a slight recovery from the lows. Vedanta's fall took Hindustan Zinc lower with it as well. And Union Bank after the business update, and GAIL too, ending at the lowest point of the day in today's session. Real estate was another sector that sulked, and that is courtesy some bearish commentary coming in from Nomura on names like Phoenix Mills and Godrej Properties. And the rest of the pack too saw losses of anywhere between 1.5% to 4%. FMCG stocks did well today. Imami was an outlier in today's session, ending almost 6% higher today. Varun Beverages, after some positive brokerage commentary, and HUL too, that note from Jefferies, along with some of the others, saw gains of 1 to 2%. And stocks that ended at a 52-week high today. Two auto names dominate this list: Force Motors and SML Isuzu, both of them ending at a 52-week high. India Shelter after Kotak buying stake in the company, and Sirma SGS too after some positive brokerage commentary, a 52-week high for the stock. Back to you guys.
Ormaz, a bunch of stocks which were buzzing around in today's trading session: Metropolis, Imami, SML Isuzu and Force Motors standing out in terms of gains that we've seen on the upside. Market expert Anand Tandon and Sudeep Shah of SBI Securities join in now. Anand, how are you feeling about the market? Not much is expected from the earnings this time around, but there are still a lot of stray stocks which keep moving around, and some of them with a fair amount of gusto. Is there any particular pocket where you believe that there is still money to be made, the opportunity is still around?
So long as the market keeps going up, there will be some stock or the other which will obviously move, and some of them will outperform. That's how the market has to go up. Which means that today, if you look at a top-down approach, I don't think that there are any sectors which you could call undervalued. There are relative valuation gaps, like, for example, the banks are probably still relatively cheaper, both from the historic as well as relative perspective. Given the fact that there is now surplus liquidity in the system, maybe NBFCs are things which can grow a little bit faster. And some of the domestic industrial stocks, etc., will continue to have reasonable growth because of the government capex and the rest of it. Not that they are particularly cheap. So the best way, in my view, to play the sector is to play the market is to just ride the index. There is no need to try and discriminate too much about and try and move along with every twist of the market, because the market is not actually presenting any great value in almost any of the sectors.
Right, that's very interesting. But the interesting part about this is also the index itself has been in this very narrow 180-point range over the last month or so. So if you were in the ETFs, you wouldn't have lost money, you wouldn't have made too much money either. But we take that point, we'll discuss individual stocks in just a bit. But there was another stock too.
Absolutely, and that's going to be Vedanta, because a report was published by the US-based short seller Viceroy Research, and they had said that the Vedanta group structure is financially unstable, operationally compromised, and pose a severe underappreciated risk to the creditors. The 87-page long report claims that the parent company is systematically draining steel major Vedanta Limited and resembles a Ponzi scheme. Vedanta declined in trade as well. It was down as much as 7%, and then the company hit back, calling the report a malicious combination of selective misinformation and baseless allegations. Ormaz, you did highlight the stocks in the top movers and shakers as well, but what are the details here? What is the clarification that's coming in as well?
Another short seller saga that has emerged here, and this time around it is Viceroy Research. This come out with a note against Vedanta, and they've mentioned the fact that this entire group structure is financially unsustainable and operationally compromised and poses a severe underappreciated risk to the company's creditors. Now, they have highlighted the parent company, that is Vedanta Resources, that is systematically draining the listed entity by draining cash out to service its own debt burden, and this entire arrangement, according to Viceroy Research, has pushed the group on the brink of insolvency, is what they have mentioned. Now, certain observations that the Viceroy group has made against Vedanta, they say that their interest expenses have vastly exceeded their reported note rates, and despite the decline in paydowns and restructuring, despite the decline in debt, the interest expenses continue to rise for the group. Now, they also say that there are a lot of non-performing operating subsidiaries with inflated asset values, is what they have observed, and the debt across these non-performing subsidiaries vastly exceeds their true value, and it is cross-collateralized across the group, is the observation that they have made, and billions of dollars worth of disputed amounts have been kept away from the balance sheet and are not disclosed in the financial statements, is what Viceroy Research has said. Now, over the last 4 years, Vedanta Limited has paid dividends worth over 80,000 crore rupees, where the parent company at one point of time owned around 65% stake, but they have sold that down to around 56% currently. And if you see the last 4 years as well, the payouts have ranged anywhere between 16,000 crores to as high as 40,000 crore rupees. Now, in a response to CNBC-TV18, the Vedanta group said that this report is a malicious combination of selective misinformation and baseless allegations to discredit the group. and it has been issued without making any prior contacts to the company, and they have issued this with the sole objective of creating false propaganda. They've chose to sensationalize information that is already available in public domain, and the timing of the report is also suspect, and it could be ahead of the corporate activity that the group is about to undertake. They've also added disclaimers saying that the report is only for educational purposes on multiple occasions, and Vedanta continues to remain focused on the growth of their business, and they have appealed to avoid speculation and unsubstantiated allegations. In response, the Viceroy Group also wrote on X saying that they have dismissed their 85-page report thoroughly without attempting to discredit their work, and this is likely because they are unlikely to refute their holdings and their findings, and they are happy to take questions. So more short seller allegations emerging against Vedanta before the demerger is about to be completed. The stock reacting to that in response.
All right, Hormaz, thanks a lot for that. So that's about the Vedanta saga. But by and large, metals were slightly under pressure in today's trading session. The fear of, maybe tariffs on imported copper and aluminum, those stocks were under a wee bit of pressure in today's trading session. Let's get Sudeep on. Sudeep, good evening. What do you make of the metal space chartically? Is there a trade that is, likely to emanate here?
Good evening, Mangalam. Mangalam, if you see the Nifty Metal Index also, that index is topping out, or it's just giving some signs of a fatigue at higher levels like most of the indices are doing on Nifty. Here what we feel that within the metal space, say a stock like JSW Steel or Nalco, they look still relatively better compared to other stocks. But a lot of these other names, apart from these two, there we are seeing some kind of fatigue creeping in. And today, for the first time after 23rd of June, we have seen the Nifty Metal Index close and break the 20-day exponential moving average and close below that. So I feel for the time being, one just needs to wait and watch how the trade deal pans out and how the metal stocks, these commodity stocks react in the next couple of days.
Okay, will be important to keep an eye out on that and how they react as well. But let's move on to another couple of names that were buzzing into it today, and this is the EMS pack. Now, JP Morgan is bullish on the electronic manufacturing companies, where they'll talk about a Syrma SGS, Dixon Technologies, as well as Kaynes Technologies. And an upgrade came in from the brokerage house, which helped the stock soar in trade. Upasana is here to give us the highlights of that report. Upasana?
Well, EMS stocks continue to remain in focus today as JP Morgan initiated coverage and has recognized the sector as the sunrise sector, estimating strong revenue growth of nearly about 32% CAGR for the next 5 years. Now, the brokerage believes this growth will be led by rising electronics content in the products, Make in India push, and even realignment of global supply chain to India with China Plus One strategy playing out. It is also recognized to emerging opportunities such as OSAT and PCB, while it expects that the export could be the next growth frontier for these companies. Now, it has given an overweight rating on 3 stocks, that is Syrma, Dixon Tech, and even Kaynes Technology, and target for Syrma at 800 per share, Dixon at 17,700 per share, and Kaynes at 7,150. While it has given a neutral rating on Amber and signed DLM, and an underweight rating on Avalon Tech. The target price for Amber, it is set as 7,350, signed DLM at 450, and Avalon Tech it sees at 650 per share. Now let us look at the key growth drivers that the brokerage has highlighted, which is the reason why it is overweight on these 3 stocks. Coming to Syrma first, it expects the exports to come back by FY27. Hence, it sees a growth acceleration and margin expansion going forward. Next up is Dixon. It expects that the mobile-led growth will be the key driver until FY27, and beyond it, non-mobile segment will be the key growth driver. For Kaynes, it sees the fastest 46% revenue CAGR over FY25 to FY28, and it also targets a revenue of $1 billion by FY28 on this company. For Syrma, signed DLM and Avalon Tech, it believes that the export could be the next growth frontier over the long term. Overall, it sees a 3x times 3-year rally and demanding valuation, which is why it is seeing an earnings upgrade on this sector. So overall, it's a positive note, and EMS continues to be the sunrise sector, is what the JP Morgan has highlighted.
Okay, Upasana, thank you so much for that, keeping an eye out on those EMS players. Anand, what's your view coming in for the EMS players, whether you look at Dixon Tech, Kaynes Technology, on the smaller end, you have Avalon Tech, Sign TLM also. Would you play with someone who's already seen the rally, like Kaynes, Dixon Tech, or would you go for the, smaller names which are coming in there?
Well, I mean, I think the sector is still in a nascent stage. The companies still have a long way to go in terms of growth. So it is perhaps better to look at, if you want to be invested in the sector, to look at those which has an established execution track record, because it's not like we are doing anything much in this sector other than being able to deliver in volume and at a reasonable price. It is still a long way to go before we can add value and capture more of the value in the final product, because we are not backward integrated. Some of the companies that you mentioned are now looking at getting backward integrated. So at this stage, I think the value addition is more likely to be in the companies which have at least gone past the initial screwdriver stage technology and have started to manufacture some of the components. The newer companies will actually be in the front end, and therefore, while they'll be reflecting the excitement in the stock price, their ability to absorb and technology and deal with larger players internationally may be far lower.
Right. Also, Sudeep, what's your view coming in the charts? Anything that you're finding attractive right now in the EMS play, or one could look at entering right now?
I feel it's time now. I guess in the next 1.5 months, these stocks such as Dixon or Kaynes Tech, they would see a good traction. Right now, a base building activity is happening here. Dixon, in the last few months, we have seen it fall up to 13,500, 14,000 from a price action perspective. But in the last couple of weeks, we have seen, especially a stock like Dixon, building up a base closer to this 15,000, 15,200 mark. And the 2 days, the 2 trading days, that is Monday, Tuesday, and Wednesday, all the 3 days, we've seen some kind of a positive action coming in this stock. So I feel out of all these names, Kaynes Tech, Dixon, although they are at expensive valuation, but the price action is supportive right now here. And overall, till from a Dixon's price action perspective, till 15,000 holds, I feel 16,500, 17,000 zone is coming in the next couple of months.
All right, we take that point. With that, we'll take a short break. On the other side, we'll get you more on the markets as well as individual stocks, get you key events to watch out for tomorrow, along with some of the corporate vices that we have as well. Anand, Sudeep, thank you so much for staying with us and talking us through with what the market situation is like right now, what sectors and stocks are in focus. Stay with us.
Hey!
हो गया एडमिशन?
Yes, अब बस लोन बाकी है।
एजुकेशन लोन के लिए SBI रिलायबल है। कोलैटरल फ्री लोन्स, टैक्स बेनिफिट्स, गर्ल्स के लिए इंटरेस्ट रेट्स, कंसेशनल एंड मोर।
सबको पता है।
SBI एजुकेशन लोन्स रिलायबल है, सबको पता है।
This is the drive of your dreams.
You and I, we are dreamers. You and I, we are believers.
Introducing the all-new Skoda Kailak. Own your dream.
नितेश श्रीवास्तव जी सिर्फ 35 साल की उम्र में अचानक एक बीमारी से चले गए। उनकी टर्म लाइफ इंश्योरेंस के पैसे बच्चों की पढ़ाई और घर खर्च में काम आ सकते हैं। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 2 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 700 रुपए महीने से शुरू।
Welcome back. You're watching us here on Markets Forward. Listless day for the frontline indices. A lot of individual stocks abuzz as well. We spoke to a bunch of corporates today. Let's get to the key corporate voices. First up, from the primary markets, the IPO that's opening later this week, Anthem Biosciences, betting big on the China Plus One strategy. The management says it's proactively investing in manufacturing facilities to address the growing demand. That's not all. They also added a number of queries or inquiries that have increased in the last 6 months, specifically on the China Plus One category. The company's dependency on China's supply chain is less than 20% against the industry, which is in the range of 60 to 70%, and also has 10 new peptide projects in the pipeline, working with clients to develop the next generation life-critical drugs. Commenting on the key metrics, they said they'll be able to sustain margins at current levels and does not anticipate any challenges in terms of revenue and margin going forward. The last 3 years, revenues have compounded over 30%.
Next up is Signature Global. The realty firm has a target to line up new launches worth 70,000 crore rupees. 4,000 to 3,000 crore rupees worth of projects were unveiled in the first quarter, that is Q1 FY26. Now, projects worth 13,000 crore to 14,000 crore rupees will be out in the coming 3 quarters as well. The management adds that sales were low in Q1 FY26 on account of high base in the same quarter last year. Further expects collections to spike up at the end of Q2 FY26 and Q3 FY26. But the company doesn't see the price going beyond that 7 to 8% increase that one has seen in micro markets.
We also had the management of Sanathan Textiles join in. They're bullish and optimistic on the textiles and yarn space, seeing momentum for both domestic and export demand. To make the most of growing demand, it's now starting a greenfield facility in Punjab with a capex of 2,100 crore rupees, something that it had alluded to the street earlier itself. Starts commercial production in the next 3 to 4 weeks. Expects to see about 60 to 70% revenue contribution from the new facility, which basically doubles their capacity, which implies the revenue growth for this year could be 70% with double-digit EBITDA margins for this year. On an absolute basis, the revenue 4,500 to 4,800 crores in FY26.
And before we wrap up this edition of Markets Forward, let's go across to Ria, who's here to tell us which are the important events to watch out for in tomorrow's trading session. Ria.
Well, yes, Vinny, it's a data-heavy Thursday. Globally, in the US, we have the initial jobless claims rolling out tomorrow, and Fed Governor Waller is also set to speak, so watch out for any important comments coming out of there. Germany's CPI and Japan's PPI data are also on the radar, while the OPEC meeting in Vienna continues tomorrow. Back home in India, TCS kicks off the earnings season tomorrow, and Tata Elxsi, Anand Rathi and IREDA will also be reporting their quarterly numbers tomorrow. On the corporate front, PC Jewelers Board will meet to consider a fundraise, while Tourism Finance Corp will weigh a stock split. Also on the radar, Dr. Reddy's Labs will trade ex-dividend, and MCX is set to launch its electricity futures contracts tomorrow. And finally, in the primary markets, all eyes on SmartWorks co-working spaces. The IPO opens for subscription tomorrow.
All right, Ria, thanks a lot for that. Those are the bunch of events that we need to watch out for in tomorrow's trading session. With that, Vinny and me will take your leave on this edition of Markets Forward. Thank you so much for watching. Stay tuned to CNBC-TV18 for more news and updates.
Co-powered by SBI. Best hai sabko pata hai. In association with
DS Group. Create what is worth creating.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC-TV18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
In this special episode of HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective, co-presented by Cognizant, top HSBC India leaders Ajay Sharma, Amitabh Malhotra, Anita Mishra and Sandeep Batra reveal how they're building a future-ready, diverse and equitable workplace. Inclusion and diversity aren't just an agenda. It's a mindset that shapes leadership and drives real change. Future Female Forward, at these times only on CNBC-TV18.
presented by HSBC. Co-present